So, I know a lot of investors, especially in the US, and probably more so in the US, tend to just focus on their home market. Now, it's a big home market, but you're talking about opportunities that you're seeing in a particular market, so Germany. What's your advice for someone that's sitting in the US, for example, thinking should they take the time and the effort to look at a company in Europe?
Yeah, absolutely. I mean, what you're referring to is the home bias, I think it's called. People invest into where they're from. They're familiar with their home country. They know the companies, and it makes sense. What we always say, you shouldn't only invest into something that you understand and that you know. And it's more difficult as a US investor to look at the company in Germany, trying to understand the context of the company, the market, etc. The great thing is now we have the internet. You can read a lot. There are studies that you can read. You can read opinions of analysts. You can order newsletters if you're interested in that, like if you don't have the time or to do the research yourselves. But in general, I think you should really try to diversify your portfolio also away from your home country. I don't know about exact allocations and like should it be 50% home and 50% abroad. That's everybody's own opinion. There's also some currency risks, even though I think this is something they use it as an excuse. They say, oh, I invested into a company in Europe and then I have like an exposure to the euro. But the reality is the exposure that you have depends on the companies. Like in particular in Europe, we have a lot of export-driven businesses. They typically make on average, I think 70% of the revenues in DAX. That's our main index. And the 30 biggest companies essentially. I think 70-something% of their revenues comes from abroad. That means even if you invest into such a company, you don't have a high currency risk.
Yeah.